The average home in Dallas has appreciated 21.2% in the last year. That is straight from the MLS data in the May report that came out last week. 21.2%. So for everyone telling you that a housing crash is coming any day now, even if it crashes 21.2%, you'd just be right back to where you were if you would have bought a house 1 year ago in Dallas. Mortgage rates are climbing again, and it looks like they're going to be staying above 7% for the foreseeable future. Last week's jobs report showed the labor market is still just too strong for it to make any sense to drop rates, and we'll cover everything in that report here in a minute. Overall inventory continues to look more healthy every single week, but new listings are still lagging behind. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties, as well as the national real estate market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like. And if you stick around until the end, it's my favorite part, the top 10 ranked charts, hottest and coolest, both cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is June 10th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to check the latest weekly market update. First up is market news. The average home sold price in Dallas is $716,828 as of last month's data. That is an increase of 21.2% year over year. And I just want you to see this screenshot pulled straight from the MLS so you know I am not making this up, and you can see the chart for yourself. It is going straight up right now. Now that is a huge jump month over month. I would expect this number not to continue like that, but maybe even to come down some next month, because that is a big jump. It does not look like a sustainable climb. But the point I'm making here, as I said in the intro, if you are listening to those pages and accounts that have been saying there's a market crash coming any day now, just know they have been saying that every single day, every single year since the beginning of time. All you have to do is go scroll down through all of their videos, and you can look years and years back, and you're going to be seeing the exact same thumbnails with the exact same flames and red arrows pointing down and shocked faces. It's literally the same thing over and over for years. And what you need to know is, if you decided to listen to them 1 year ago and not buy a house, here's what it actually cost you: 21.2%. So if you could have bought a $500K house, you decided not to because you thought the market would crash, what it's cost you so far is $106,000 on average. That's the reality of the situation. So please stop listening to these accounts. Just find out what house you can afford with your desired monthly payment as well as your total cash, and just buy that house knowing that you can comfortably afford the payment indefinitely. As long as you can afford that payment forever, it doesn't matter what prices do 6 months from now, a year from now, 5 years from now. Don't let people scare you out of buying a house that you can afford while housing continues to get less and less affordable. Just make the best decision you can with your actual situation. Okay, moving on, we are talking about the BLS jobs report that came out last week. This is what caused mortgage rates to start climbing again. So the market expectation was that there would have been 180,000 new jobs created, because remember, last month there were only 160,000 jobs created. So that was our first sign the labor market might be softening. The expectation for this report was 180,000. And because of that expectation, that's why last week before this report came out, we were seeing a nice drop in rates all the way down almost to 7% again. But when the report came out, instead of only 180,000 jobs, the economy added 272,000 jobs in May. That's nearly 100,000 more than expected. So of course, on that news, mortgage rates had a big jump up at the end of the week. Now, one thing kind of working in our favor is that the unemployment rate did rise up to 4%, and that's compared to 3.7% last year. So not a big jump at all, but at least it's heading in the right direction if we want to see rates drop. And some more positive news, if you can call it that, is the jobs openings data, which is important to the Fed, is continuing to drop, as well as the job quits ratio remained low. So those two things are, the quits ratio is just the number of people quitting their job to go to a higher paying job. That's dropping. And of course, job openings data dropping. If there's less jobs available, there's going to be less jobs being created. according to the CME Fed Watch tool, which just measures what the odds are of the Fed actually dropping rates in the future, is showing a 99.4% chance rates remain unchanged next meeting, and the chances of a rate cut in September dropped from 68.7% all the way down to just 54.4%. So the consensus is rates are going to stay up here. It doesn't seem likely at all that the Fed is going to raise rates, but it also doesn't seem likely that they're going to drop rates, maybe even for the rest of the year. Now, all hope is not lost yet. We do have the CPI inflation report coming out on Wednesday. However, in my opinion, if inflation comes in bad, rates are going to go up. But if inflation comes in good, I don't think they're going to go down much. Again, because I think the jobs data is a little more important at this point than inflation. So all of this to say, if you're wanting to buy a house, I think you should be expecting at or above 7% rates for most of this year. Okay, moving on, let's start with national housing inventory. This week we had an increase of just 6,674 homes for sale in the US, which is not much, but it gets us up to 611,596 homes available for sale in the country. For reference, the all-time inventory bottom in 2022, we only had 240,000 homes for sale. At the peak of last year, we had 570,000 homes for sale, and in this same week in 2015, we had 1.165 million homes for sale. So we're up more than double from the 2022 bottom, but still need to nearly double again to get to a normal market. But we're getting closer every week now. A little bit slower this week, but we are getting closer every single week, which is great. Now we're looking at the new listings data. Basically, we started the year tracking at or even above 2022's new listings numbers, which was awesome. But a little over a month ago, we started lagging behind. And this week, we actually had 13,007 less homes listed than the corresponding week in 22. You can see this big gap. The hope was it was going to continue up just like what 22 did. It's not doing that. So right now we're basically tracking right between 22 and 23, which of course it's great that we have more listings than 23, but the reality is we actually need to be above these 22 numbers to get back to a normal market. So this is definitely not ideal. And the more important thing to note here is that there are only a few more weeks until we start to see the seasonal decline for new listings. So you can see somewhere up around here, it usually happens in July, so I'd say maybe a month from now, we're going to see less and less new listings every single week for the rest of the year. So if you're wanting to be picky right now and you're passing on perfectly good homes hoping that something better is going to come up later, you're actually going to have less and less new options to choose from every single week starting about a month from now. Something else I wanted to show you nationally is the pending sales data. All I want to show you here is that we have had more pending contracts. We're doing more sales than we did in 23, but still nowhere near what we did in 22. So I just want you to see that reflected in the pending sales because these are the closings that are going to be coming up. And as of now, we've got about 13,000 more homes in the country pending than we did this week last year. So not a huge jump, 13,000 more in the entire country. The last thing we cover nationally is percentage of homes having price decreases. Every year it's totally normal for a third of homes to take a price cut before selling, and this moves up and down totally based on rates. So looking at the national chart this week, we have about 36% of homes had a price cut. Last year we got as high as 39.2. The year before that we got as high as 43.2, but it's normal for this number to start increasing and to go up into sometime in November. All we're really looking for on this chart are aggressive swings in either direction, which will be totally dependent on mortgage rates, which I, again, expect mortgage rates to remain about where they are for the rest of the year. Okay, let's move on to mortgage rates. We started the week at a 7.11, and as you'll see, the previous Friday, we were up at 7.17, and we were having a nice drop all the way down to 7.03 on the expectation that the labor report was going to come in soft. It didn't. It came in way hotter than expected, so we jumped straight back up to 7.15, pretty much to where we were the previous Friday. And if I had to guess, I think we're going to climb a little bit more today. And yes, looking at the 10-year chart, so this big candle, that was Friday, that got us up to that, what was it, 7.15. We opened up a little higher today. It doesn't look like we're climbing anymore though, but we are going to be slightly higher than where we were on Friday once the average rates come out today, later this afternoon. Now, regarding mortgage purchase applications, we actually saw a 4% decrease this week in the number of people applying for mortgages. As you can tell on this chart, for much of this part, we've kind of been up and down in a range. It looks like we broke down below that this week. So we're at the second lowest point that we've been all year. This is the lowest point, and there's really no reason to believe mortgage demand is going to grow with rates this high, which is why you still see a ton of new construction offering anywhere between 4.5 to 5.99% rates, because that's where the demand is for home buyers right now. Also, I want to point out all of this is national data. You have to keep in mind the Dallas-Fort Worth market is the #1 fastest growing in the entire country. This is why you can see record low demand, record low purchase application data, yet still have home prices in Dallas having gone up 21% in the last year. Because our market is the hottest in the country. You can't really compare it to anything else. So when we're looking to national data, you have to realize we are above all of that because we have the highest demand. Even within Texas, if you go look at Austin, they've been in a buyer's market for years now. So when you're looking at this national data, don't think it applies to us the same as it does the rest of the nation. Okay, before we move on to the local market data, if you're considering buying a house anywhere in Texas in 2024, 2 things. Number 1, if you don't want to go broke buying a house, I've made a course for you, which includes a new and improved version of my Max Affordability Calculator that now has a budget feature. With this tool, you'll input your actual spending habits from your actual bank account and discover with 100% accuracy how much money you can and should be allocating towards a house, as well as how much that top monthly payment will get you in today's market. It takes into account everything all the way down to your tax bracket and is a no-brainer for anyone who wants to have peace of mind about their purchase. Number 2, if you want to become a master of the home buying process, whether it's new construction or a pre-owned home, I've made courses for those as well. This will educate you on everything you need to know, and it's great to take before you even step into the market so you're fully educated, and links to all of those will be down in the description below. Okay, now let's move on to the local market data. We're starting with the MLS data in Dallas County. We had 613 listings in the last week. That's 185 less than last week. 313 closings. That's 31 less than last week. 71 of the homes closed were immediate sales, meaning they contracted within the first week. That's 37 less than last week. 287 went under contract. That's 5 more than last week. In total, there are 2,291 homes either under contract or in pending status. That's 57 less than last week. Looking at Collin County, we have 505 new listings. That's 81 more than last week. 271 closings. That's 44 less than last week. 75 immediate sales, 13 less than last week. 212 went under contract. That's 45 more than last week. In total, there are 1,944 homes either under contract or in pending status. That's 9 less than last week. Okay, moving on to the Market Action Index. The Market Action Index is just a quick, easy way to see what's going on in the market. It takes into account all of this data, puts it into one easy-to-read graphic with a number. Anything at 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in. We are still here in Dallas County at a slight seller's advantage at a 43. And all we're looking for here is just, is the market looking normal? And so far it's looking totally normal. Prices have been climbing so far. One thing I do want to point out is it's likely, as you can see the last few years, prices should remain about here. We should be close to the peak of prices, and it's likely that they're going to remain here for the next few weeks before they start to decline. But just know we're about at the peak. So median list price, again, it's going to remain around here. I don't expect this to be climbing anymore. I expect it to just be hanging out there. That's looking normal. Median days on market did come up a little the last few weeks. We had a few weeks down at 35. We're back up to 42. Number of homes having price decrease, just about to the peak of where it had been before. Inventory, a small drop, and the Market Action Index coming down. This looks really dramatic though. This is 45 to 43. It's not a huge move. It looks real dramatic on this small chart though. But in total, we're coming up to the peak of the market, and then sometime next month, things will start cooling off. And when I say cooling off, I mean like a little bit. They're really not going to cool off till December. I'm just saying they're not going to heat up further. Okay, looking at Collin County. Collin County is a 41, a slight seller's advantage as well. Median list price has been hanging out here. It should continue hanging out there for the next few weeks. Their median days on market had a climb last week, so just remained there at 42. Price decreases, pretty flat here. Inventory, very slow climb, not what we hope for. And Market Action Index continuing to cool off. So again, everything's just looking normal. We are still in a seller's market, and we are nearing the peak of the selling season. Okay, now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin County, and this is ranked using that same Market Action Index number. Starting with the hottest cities, Coppell, Louisville, and Carrollton all remained in their top 3 spots, Grapevine heats up 1, Plano heats up 1, Lancaster cools off 2, Richardson remains, Ferris heats up 1, Garland cools off 1, and Balch Springs jumps onto the list and replaces Grand Prairie at number 10. Then we like to zoom in on specific zip codes. The absolute hottest is Carrollton, 75010 at a 66.74, followed by Louisville, 75067, Coppell, 75019, Plano, 75025, Louisville, 75077, Richardson, 75080, Plano, 75023, Carrollton, 75007, Plano, 75093, and Lancaster, 75134, which is still nearly a 60, so still a very hot zip code. All the top 10s are just about a 60 and above. Now, same thing, looking at the coolest cities, Van Alstyne and Lavon remain the two coolest. Van Alstyne, of course, is the only buyer's market, has been that way for a long time. Then Leonard cools off 2, Prosper heats up 1, Salina cools off 1, Nevada cools off 2, Rockwall remains, Blue Ridge heats up 4 spots, Royce City and Red Oak remain at 9 and 10. Looking at specific zip codes, Van Alstyne, of course, the buyer's market, 75495, followed by Dallas 75204, Lavon 75166, Dallas 75203, Leonard 75452, Prosper 75078, Dallas 75205, Dallas 75219, Irving 75038, and Salina 75009. As always, if you're looking to buy or sell in the Dallas market, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. That's all in the description. Thank you for watching, and I'll see you in the next video.